All right, to begin with, the next topic that we have is books of original entry. So the first question obviously would be, what are these books of original entry? There are six books which we call books of original entry. What are those books? First of all, there is sales journal. Sales journal. In this sales journal, we record all credit sales transaction. All credit sales transaction only. Credit sales transactions. Acha ji, the next one that we have got is sales return journal. Sales return journal. In this we record all return inwards or sales returns. Same thing. Acha ji, after sales and sales return journals, we have got purchase journal. Purchase journal in which we record all credit purchase transactions, all credit purchases. And then we have got purchase return journal in which we record the return outwards. Purchase return journal. Record all purchase returns here, return outwards. Yes, return outwards. Purchase returns. Take a G. Now your question could be that we have recorded the credit sales and credit purchases. What about the cash sales and cash purchases? All the cash transactions of a business, whether related to cash or otherwise, they are recorded in what we call the cash book. Okay, Ji. And then all the remaining transactions, they are recorded in general journal. ठीक है जी, तो in this one we record all cash transactions and discounts. Cash transactions and discounts. Discount is the only expense that we do not record. Other expenses, they are usually recorded in general journal. Cash transactions and discounts. Achha, cash transactions include both the cash and bank transactions. In this we record all remaining transactions. So what remains other than these transactions? So for example, purchase of fixed asset on credit. It's not a cash transaction. It's not credit sales. It's not sales return. It's not credit purchase. It's not purchase return. So credit purchase of fixed assets, it would be recorded in general journal. Recording of depreciation, the opening and closing entries, when we are starting a period, when we are closing a period, those entries, they're recorded in general journal. Similarly, if you have carried out to record the accrual, if you have accrued an expense, haven't paid for it yet, it would be recorded in the general journal, so on, all remaining entries. Achha, the thing about these books is, in sales journal, we record all the credit sales. So what about the debtors? ठीक है जी, I'll show. Okay, so the way sales journal works is, I'll give a heading, I'll give you the format for these things too. So sales journal, the format would be, I'll have date, in which I'll write date of the transaction, let's say 1st May. Okay, then on 1st May, I'll have description and amount. As simple as that, just these three columns. Achha, what would happen if I make a credit sales to ABC of $1,000? ठीक है जी. In this I will just write ABC, and over here I will write $1,000. Usually the way we have learnt with the T account, how would we have recorded the transaction? We would have a T account for ABC. We have a T account for ABC, and then we'll have a T account for sales. And in these two T accounts, we'll be recording the transaction. The only difference now would be that all the sales, they are being recorded in the journal, and at the end of the day or month or period or whenever, when I have got this page full, or when I'm going to do the sum, I'll note down the sum and I'll post a single entry with this amount in the sales T account, and I'll write over here sales journal. Okay. Exactly. Then put it in the sales T account as a single entry. Instead of having many entries in the sales T account, we'll put one single entry as the sales journal amount, the total of the sales journal. Whereas for the ABC account, we'll record each transaction separately whenever we are buying and selling or returning stuff to him, or he's returning stuff to us. Sales journal, it will have a corresponding sales return journal. Okay. So the same way we have got the sales journal, whenever we are making the sales, we would have one register in which we would be noting all those credit sales this way, and in the individual T accounts of each debtor, we would be noting down their transactions. The same way we have got sales journal, we'll have sales return journal, same format. Similarly, we'll have a purchase journal and we'll have a purchase return journal. And for all those four T accounts, we won't be posting the individual entries in the T accounts. We'll be posting the entries first in their respective journals. And at the end of the period, we'll be calculating the totals and posting the total as a single value in the sales T account or purchase T account or sales return T account or purchase return T account. Okay. Acha ji. Now for the books, for the T accounts, how are they distributed between the different book? These T accounts, they are further distributed in ledgers. Uh, as in the different types of T accounts, they're clubbed together in a single type of ledger. So first of all, we have got a sales ledger. There is sales ledger. Sales ledger, it contains T accounts of all debtors. Sorry. कुछ मैंने आपको स्क्रीनशॉट भेजा, मैं इब्राहिम को भेज दूँ। अच्छा मैं भेज अभी भेजना है। ठीक है। अच्छा मैं भेज देता हूँ। Contains T accounts of all the debtors. ठीक है जी. Then we have purchase ledger. In purchase ledger, we'll have T accounts of all creditors. And then we have general ledger, in which we will have all the remaining T accounts. Remaining T accounts except for cash and bank, because cash and bank T account, they will be in the cash book. Cash book is sort of a T account, we'll soon see. So in sales ledger, we recorded all the T accounts from debtors, ABC, XYZ, JKL, all the debtors that we have. For purchase ledger, we'll have all the T accounts. They'll be contained in one ledger, one register. So this thing, personally, I believe it made more sense when we were doing manual accounting. So for example, in between all those thousands of T accounts, if you want to look at all the debtors, it would be difficult to find. So better keep them in a separate book or a separate ledger or a separate register, or perhaps assign a separate person to do the accounting of just this thing. Then for purchase ledger, you'll have a separate person or a separate book. And for general ledger, so all the T accounts, they would be separated. And for physically, if you are like using pen and paper to record, this would be an easier approach to use. Now once we have got these computer systems, this thing, personally, I believe it makes less sense. Now the systems, the SAP and different accounting tools that we have got, any T account that you wish to extract, or any report that you wish to extract, any particular sets of T accounts that you wish to extract, you can easily do that from the same system. So again, yes, this thing, it has its usefulness, but perhaps its usefulness is decreased when we have these accounting system, computerized accounting systems. Anyhow, so this is the overall format of how the various books of original entry, where they would be placed and how values they would be put in each of them. Now we will practice one by one all the different books of original entry, as in how we'll do the recording in those particular books. So we'll begin with the cash book. Cash book is perhaps the it is unique in the sense that it's drawn on the format of T account. So it's a T account in itself. So let's see how the cash book transactions will do those.